day. Welcome to today's class. If this is your first time on this channel, please click on the red subscription button to subscribe to our YouTube channel so that when we drop more educative content, you get notified and you can also watch to pass your respective exams. So in today's class, this is our last video. Yes, for now, this is our last video on company income tax. We have 3 other videos ahead. So if you have not watched them, please watch out for them before this. So in today's class, we'll be treating how to calculate company income tax using the dividend basis. Yeah, calculating the company income tax using the dividend basis. There are some things we need to know before we even go in detail into this. It's very simple actually, very simple. Is that there are some situations whereby company might make 5 million naira profit and they are paying 10 million naira as dividends. Say it is from their, you accept with me that it is from their profit they are going to pay dividend, right? Let's say we have 10 million naira profit this year or 10,000 naira profit this year, and you are paying 3,000 dividend. It is still understandable, but you are making 10,000 naira profit and you are paying 15,000 dividend. How? So it is possible. This is very possible. That's why we have something we call retained earnings. Yes. Sometimes when company makes profits, they don't spend all their profits, they keep them. So they might decide to bring out of the profit that they have kept for previous years and use it to pay dividends. So dividend is just like taxing company based on the dividend they are paying out. Majorly occurs when a company has no profit, in the sense that they make profit, but they have paid all the profit as dividends. In that situation, we are going to tax their dividend and not their profits. So instead of taxing their profits, they make 10,000 naira profits and they are paying 10,000 naira dividend. So you accept with me that this company does not have any profit. So what do? We tax their dividend as if we are taxing their profits. So that's the simple analogy. But if, for example, now they are paying 15,000 naira dividend, so the question is, which one will you tax? Is it this 10,000 naira you still tax or this 15,000 naira? You are going to tax 10,000 naira. And why? Because you see, anytime a company has a retained earnings from previous years that they did not spend, they did not, probably they make 100 million, they decide to keep 20 million and spend the rest. Now, you see that interest or that retained earning that was brought from previous years has been taxed in those previous years. So you don't apply tax on them again. Retained earnings was actually gotten from the company's profits, and the company profit must have been taxed as of then. So you don't tax retained earning again. So if company is paying more than their profit, you just tax their profit alone. And if at all they don't have any profits, let's say for example again, the profit of a company is zero and they are paying 15,000 naira as dividend, you don't tax them at all. Why? Because they did not make any profit. This 15,000 naira is of course from their retained earnings, which has been taxed in previous years. So that is how to go about it. And we take a very simple question. It won't take time at all. We look at it and we solve together. So we have a company, a question rather. An extract from the financial statement of ABC Limited and XYZ Limited for the year ended December 31st, 2020 revealed the following. So after that profit or loss for the year, ABC has a profit of 3.6 million, XYZ 1.2 million naira as loss. Retained earnings brought forward by ABC is 4.8 million, and retained earnings brought forward by XYZ is 2 million. So dividend declared in 2020 and paid in 2021. The dividend they declared by company ABC, they declared a dividend of 4.2 million, and company XYZ declared a dividend of 750 million. So they said based on the financial information disclosed by the company, we should calculate their CIT. Now, the company or the year we are dealing with here is year 2020, right? Of course. So we have profit of ABC. Let's note it out. Profit ABC, ABC and XYZ. So profit or loss. Profit, let's do it this way. Profit or loss. So profit or loss of ABC is 3,600,000. Profit and XYZ make a loss of 1,200,000. So retained earnings. Retained earnings of ABC is 4.8 million. 4,800,000 and retained earnings of XYZ is 2 million. So they ask us to, so dividend they want to pay. So company ABC wants to pay a dividend of 4.2 million and company XYZ wants to pay a dividend of 450,000. So how do we tax this company, or what are we going to use to apply them to tax? Is that now company ABC makes a profit of 3.6 million, right? And is paying a dividend of 4.2 million. Don't forget that I said that the retained earnings will not be taxed because probably in the previous years retained earning has been taxed. So you don't tax retained earning again. If you are taxing retained earning, that means you are applying tax on an income twice, which is not possible. So we don't tax retained earnings. If they can pay dividend of 4.2 million naira, definitely you will agree with me that what they are adding from their retained earnings is 600,000. Because if you look at it, 3.6 million naira plus 600,000 will give us, is it 600,000? 3.6 million naira plus, yes. So you agree with me that the extra amount that ABC is adding to their profit to pay dividend is 1.2 million naira, not 600,000. So this is their profit, and they only pick 1.2 million from their retained earnings to be able to pay their dividend. Definitely what we want to tax is their profit. We don't have anything to do with their dividend. So we apply tax on 3.6 million naira. So for company ABC, so ABC 30% of 3.6 million naira. So 30% of 3.6 million naira, that will give us 1,080,000 naira. So 1,080,000 naira. So company ABC will be paying 1,080,000 naira as tax. Now let's come back to company XYZ. Company XYZ makes a loss of 1.2 million naira and they are paying dividend of 750,000 naira. Now you will accept and you will agree with me that this 750,000 naira is from their retained earnings because they did not pick anything from their profit. They can't pick from a loss, of course. So 750,000 naira is from their retained earnings, meaning that we are not going to tax them at all for that year because I told you already that we don't tax retained earnings. It has been taxed in the previous year, so we don't apply tax on them again. So this is how you go about calculating CIT based on the dividend base. So it's very, very simple. You just apply dividend, you apply tax rather on the dividend profit that was made. Even if everything has been paid as dividend, you apply tax on it, but not on the retained earnings. So that brings us to the end of calculating CIT using the dividend basis. If you don't understand anything, please take your time to go through the video again. And don't forget to like, subscribe, give it a thumbs up. You encourage us. Drop whatever is in your mind in the comment section, and we'll see in our next video class.